Welcome to How Money Works, where we make money talk simple. If you've ever thought investing is too risky, too complicated, or just not for people like you, this video is for you. We're diving into the world of investing, breaking down everything you need to know to get started in 2025. No confusing jargon, no Wall Street suits, just clear, actionable steps you can take today to start building your financial future. Whether you're starting with $20 or $2,000, this video will show you how to make your money work for you. Let's get started. Look, we all know saving money is important, right? It's what responsible adults do. But here's the thing most people don't realize. Saving alone isn't enough. In fact, if you're just saving and not investing, your money is actually losing value over time. Why? Because of this little thing called inflation. Inflation is like that friend who always eats a bite of your food. It slowly but surely eats away at the purchasing power of your money. Think about it. If you saved $10,000 a few years ago, it wouldn't buy you the same amount of stuff today, would it? That's inflation at work. But here's the good news. Investing is the antidote to inflation. It's how you fight back and actually grow your money over time. Investing is like planting a seed. You put your money into something with the potential to grow like a company or real estate. Over time, that seed can sprout, grow roots, and blossom into something much bigger. And the best part? You don't need to be a millionaire to start. You just need to start. Even small amounts invested consistently can add up to big results thanks to the power of compound growth. Compounding is like magic. It's your money earning money, which then earns more money. It's like a snowball rolling down a hill, getting bigger and bigger over time. So why do you need to invest? Because it's the single most effective way to build wealth, beat inflation, and achieve your financial goals. Okay, so you're ready to start investing. But where do you even begin? Don't worry, it's not as complicated as you might think. There are tons of investment options out there, but let's focus on 4 popular choices that are perfect for beginners. First up, we have stocks. Imagine owning a tiny piece of a company you love, like Apple or Tesla. That's what buying a stock is all about. When the company does well, the value of your stock can go up. It's like owning a slice of their success. Next, we have ETFs and index funds. These are like investment playlists. Instead of picking individual stocks, you're investing in hundreds of companies at once. This spreads out your risk and makes it easier to grow your money over time. They're low cost, easy to buy, and perfect for beginners. Now let's talk about real estate. You don't need to be a millionaire to invest in property anymore. You can start small with things like REITs, which are like ETFs for real estate. Or explore crowdfunding platforms where you can pool money with others to invest in bigger projects. Real estate can provide both income and appreciation, making it a great addition to any portfolio. And finally, we have bonds. Now, bonds might sound a bit boring compared to the excitement of stocks, but they play a crucial role in a balanced portfolio. Bonds are like loans you give to companies or governments. They offer more stability and lower risk compared to stocks, helping to protect your investments during market ups and downs. Remember, investing isn't about picking the sexiest option. It's about finding the right mix of investments that align with your goals, risk tolerance, and time horizon. All right, enough talk. Let's get down to the nitty-gritty of how to actually start investing. Here's a simple 3-step plan that anyone can follow. Step 1. Choose your platform. Think of it like choosing your weapon of choice in a video game. There are tons of platforms out there, each with its own strengths. You've got traditional brokerage firms like Fidelity or Vanguard, or newer mobile-first options like Public or Robinhood. Do your research, compare fees, and choose the one that feels right for you. Step 2. Define your goal. Before you drop any money, ask yourself, why am I investing? What am I hoping to achieve? Are you saving for retirement, a down payment on a house, early retirement on a beach somewhere? Having a clear goal in mind will help you stay focused and motivated on your investing journey. Step 3. Start small, stay consistent. You don't need a ton of money to start investing. Even if you can only spare $20 a week, that's $20 more than you were investing before. The key is to start small, stay consistent, and let the power of compounding work its magic. One of the best ways to stay consistent is to automate your investments. Set up recurring transfers from your checking account to your investment account each month. That way, you're investing without even thinking about it. Here's a secret most financial gurus won't tell you. The hardest part about investing isn't picking the right stocks or timing the market. It's mastering your own psychology. You see, investing is an emotional roller coaster. There will be ups, there will be downs, and there will be moments when you want to pull your hair out. The key is to stay calm, stick to your plan, and not let your emotions get the best of you. One of the biggest mistakes investors make is panicking and selling when the market drops. It feels counterintuitive, but that's actually the worst time to sell. When the market is down, prices are lower, which means it's a great time to buy more. Remember, investing is a marathon, not a sprint. It's about time in the market, not timing the market. The longer you stay invested, the more time your money has to grow. So, how do you stay disciplined when things get tough? It all comes down to having a solid plan, understanding your risk tolerance, and remembering your long-term goals. Don't check your portfolio every day. Don't obsess over every market fluctuation. Tune out the noise, stay the course, and trust the process. Congratulations! You've made it to the end of the video, which means you're officially one step closer to becoming an investor. But this is just the beginning. Now that you understand the basics, it's time to take action. Don't let this information just sit in your brain. Put it to work. Here's what you can do right now. 1. Decide on your investing platform. Do you prefer a traditional brokerage or a more modern app-based platform? Choose the one that aligns with your needs and preferences. 2. Set up your account. This usually involves providing some basic information and linking your bank account. 3. Fund your account. Remember, you don't need a lot to get started. Even a small amount can make a difference. 4. Choose your first investment. Start with something simple and low cost, like an ETF or index fund that tracks the S&P 500. 5. Automate your investments. Set up recurring transfers so you're investing consistently without even thinking about it. Remember, investing is a journey, not a destination. There's always more to learn, more to explore, and more ways to grow your wealth. But the most important step is the first one. So what are you waiting for? Start investing today. If this helped you feel more confident about investing, hit that like button and subscribe. We've got new videos every week to help you take control of your money. You don't need to be rich to start. You just need to start. Every journey begins with a single step, and you've already taken the first one by watching this video. Now go out there and make your money work for you.